Yo, what's up, everybody? It's Friday, November 10th. Well, we had a big move up today. This gets to be fun. What else can I say? Yesterday, I did a video on the manic, irrational, psychotic behavior of the monetarist zombies, which is basically how you can characterize their behavior all the time. I mean, I talked about how because of Powell's, you know, benign comments at the Fed meeting on November 2nd, that their sentiment went super bullish, right? I talked about that. Like in 1 week, there was the biggest increase in bullish sentiment in 13 years and the biggest decline in bearish sentiment in 32 years, okay, according to the AAII weekly sentiment survey. So because Powell was not hawkish in his comments at the press conference after the Fed meeting, the zombies went super bullish. And then yesterday he made one little comment saying like, well, maybe, rates are not high enough to tighten the economy. Of course, that's not even how it works, but, let's just examine his rhetoric. And what happened? The monetarist zombies, who were a day before like the most bullish in 13 years, the least bearish in 32 years, what did they do? They panic sold like maniacs. And I said yesterday, that's not going to last. It's going to bounce back because the fiscal flows are very, very strong. And that's exactly what I'm literally giving you day by day what is happening to a T. I mean, nobody does that. And I'm not supposed to be doing that. I don't want to get you guys into this mindset of like jumping in and jumping out, even though everything I'm telling you is exactly on point every single day. I want you to keep in mind, the macro picture, the big picture. That's what's really important. So I said the sell-off yesterday was not going to last. I sent out to my subscribers that they have to buy that dip yesterday. I mean, we were up, 400 points today. The NASDAQ completely reversed the decline this week and ended up even higher, all right? Here's another interesting little fact that I should bring to your attention. In the last 3 days ending yesterday, November 9th, Treasury has already sold $473 billion worth of securities. That's more than half of what they are expected to sell in the fourth quarter. Now, remember, there was this panic and worry and concern about, oh my God, I even did a video on it, oh my God, the Treasury is going to have to sell $776 billion this quarter. It's never been done before in a fourth quarter ever. Well, they just did more than half of that in 3 days. They did $473 billion. Okay, what's that, like 60% of what they're expected to sell. They did it in 3 days. And the S&P is up 50 big points, okay? And you had all these guys. I did a thing on Dalio, on Paul Tudor Jones, the man with 3 names, on Gundlach, I did it, and on all the reporting that was out there in the financial press about how, oh my God, they're going to sell 700. And I said to you guys, it's just an asset swap. You see, this is where understanding and knowledge comes into play. It's just an asset swap. I mean, I sat here and my subscribers sat here like, la-di-da, have a little cocktail, whatever, not worried, not concerned in the least. Because that's what happens when you have understanding. That is what happens when you have knowledge. People people think like, oh, I don't need this stuff. I need somebody to tell me, what stock to buy at what price and when to sell it. That, I'm telling you, even if I had some cheat sheet, like I was some insider trader, and I gave you exact levels where you should buy a stock and then exact levels where to sell it, you still wouldn't make any money. You know why? Because each of us are different. You don't have my emotional framework. I don't have your emotional framework. That's why when people say, oh, let me see your track record, that is so irrelevant. Because even if I made money on every single trade I ever did in my life, and I gave that to you, first of all, that's past history. Second of all, even if it was, I had a crystal ball and I was a fortune teller and I would know the future, you still wouldn't make money because you don't have my emotional makeup. I don't have your emotional makeup. There are going to be times, even if I gave you numbers, where because of market fluctuations, because of market zigzags, because of headlines, emotional things, you might get nervous, you might get concerned, you might get cold feet. Your behavior could be different than mine. My behavior could be different than yours. I always looked at that when I was a floor trader and I was coming up as a trader. I used to wonder, like, why do those guys make money and I'm not making money? Oh, we got a new thing today here. Some babies screaming. So it's either, oh, we got the dogs too. We got the dogs. No helicopters though. I used to wonder, like, why did those guys make money? Like, back in those days, I was a total, like, a chartist, technical analysis. And I was drawing, the same lines on the chart as they were. And I was using the same moving averages as they were, and blah, 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 and all the other stupid technical indicators. I wasn't making any money. And they were making money, or at least that's what a lot of them told me. And they seemed to have money. Like, it was, when somebody has money, it's obvious. I mean, the car they drive, where they live, where they go eat at restaurants, stuff like that, right? I mean, that's something you just know. Usually, anyway. And I always thought, like, why? I'm doing the same thing as them. Like, I got that same blueprint right there. How come they're making money and I'm not making money? Because what makes the difference, I was going to say the common denominator, but it's not the common denominator. It's the uncommon denominator, is the behavior, the emotional makeup. I wasn't them. They weren't me. Obviously, their discipline and self-control, or whatever behavioral characteristics they needed so that their approach worked, they were disciplined enough to, adhere to that at all times. I wasn't. It took me a long time to understand that this whole game really is a game within yourself. It has nothing to do, even though, like, what I provide in terms of the economic analysis, that's another thing, because a guy commented on here, and I don't like to call people out, but I need to correct some things. A guy commented, oh, Mike just thinks that the fiscal flows all go to the buy side of the market. My analysis is an economic analysis. Rising fiscal flows necessarily means that there are larger government transfers to the non-government. Money, financial assets are being added. And in a free market economy, that normally equates to rising consumption, rising investment, rising corporate profits. And when corporate profits rise, stocks reflect that. I don't say it flows into the stock market, and he implied there that, oh, some people go short, so the flows are going. Has nothing to do with that. If, you know, it has not. My analysis is an economic analysis. Stocks come second. The stock market doesn't drive. I hate to tell you this, but the stock market doesn't drive the economy. The economy drives the stock market. When the economy is growing, when it's expanding, by definition, that means higher corporate profits, and that's what stocks are going to reflect. And by the way, when stocks go up and stocks go down, there's no wealth effect from that at all. People think there's a wealth effect. No. When stocks go up, what does that mean? Some people now have more stock and less cash, right? Those are two types of financial assets. So again, it's just the composition of the holdings of financial assets change, right? When stocks go up, people hold more stocks and less cash, okay? And some people have more cash and less stocks, the ones who sell out as the price goes up. Same thing when it goes down. When it goes down, it's not a shrinkage in the economy. When it goes down, some people have chosen to hold more cash and less stock. And the smart people are now holding more stock and less cash because they're buying on a discount. Case in point, what was it, last week or a couple of weeks ago when the market was selling off and when I was telling all you guys to buy, I was buying Apple stock at like the low 170s, even the high 160s. I think I got filled on an order. I have to go back and look, but I think I got filled on an order like 167-ish. It's at 185 now. And this is not a trade. I don't trade out of it. When it goes down, Apple's a fantastic company. It's a world-class company. Has the largest market capitalization of any company in the world, bigger than most countries. When the price goes down, I add it to my position, but only when the price goes down. I don't want to chase after anything. I tell people all the time, never, ever, ever chase. I've been in this game long enough to know that it's no big deal if you miss out on something because another opportunity is going to come along. It's true. Another opportunity is going to come along. So anyway, yeah, they sold like almost $500 billion Treasury, and we're up 50 big points in the S&P. Fiscal flows, the deficit so far in 7 statement days, 7 business days in November, over 150 billion. I mean, that's, I told you yesterday, I went back and I looked at my data. I have not seen a month where after 7 statement days, you got 150 billion deficit. And next week, forget it. In New York terms, forget about it. Because we got that quarterly interest payment coming out. Going to be 55 billion. And finally, I'll end off by saying, I was telling you guys, we gotta pay attention to that year-over-year deficit. We don't want it shrinking. Okay, in other words, we don't want the gap to widen out where the deficit last year is way above the one this year. That would mean they're draining the swimming pool a little bit. And we did start off in the fiscal year with a gap of about 56 billion. But I said, what did I say? If you've been paying attention, I said, I'm pretty sure that gap is going to narrow and eventually the deficit will be higher. And now it's down to only 32 billion. So we've already in the last 2 weeks seen a 20 billion 23, 24 billion shrinkage in that gap. So it's playing out exactly as I thought, and that's a good thing. That is a good thing. The only thing I would say is we still have to be a little bit wary about the November 17th continuing resolution, and we don't want a government shutdown because that would change the outlook a little bit. All right? But like I said yesterday, me personally, I don't find it worthwhile to speculate on that political outcome right now. I'd rather wait and see what happens. Because if you speculate on it now, let's say, and you go short thinking, oh, there's going to be, because I'm reading the news and it's very negative about Congress, because it always is. It's very negative about, them coming up with an agreement. I'm going to go short. Let me tell you, if they come up with an agreement, you're going to be covering those shorts at a much, much higher level. So I just, maybe you're going to guess right, but I'm not in the game of guessing. I'm in the game of knowing. Okay? That might be the difference between me and you. Anyway, that's it for today. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you. Bye. Have a nice weekend. Bye.